Everyone, hello, Sarah Nation. Welcome again to another live stream. And today we are going to be talking about a pretty interesting topic. It's something that I talk a lot in my social media, but I think that I want to expand a little bit more, and it is taxes. For those that don't know me, my name is Sarah Xavier. I'm the creator and founder of Finance Babe. I help single and divorced women to get back on track with their finances so they can live their lives on their own terms. And as I mentioned, today we are going to be talking about everything that has to do with taxes. There are things that we should know about taxes, and we also gonna touch on how we can minimize our tax liabilities, okay, especially if we are entrepreneurs. So why it is important to talk about taxes? Well, reason number one is because we want to demystify the process of filing taxes, of anything that has to do with taxes. And also, we want to make it less daunting. For a lot of people, unfortunately, when it comes to taxes, it gets people get so scared with the IRS, and also they get so stressed out when it comes to taxes. So today we are going to demystify that. And then reason number two is because by understanding how taxes work, we can better manage our finances, and we can make sure that we are paying our fair share to the IRS, but nothing more. Okay. And then when I mentioned IRS, I'm going, assume also that I'm talking about state taxes, because there are a lot of states in the United States that you actually have to pay state taxes as well. And it is our responsibility to do so. So, I went the other way. Let me see. Okay. So what are we learning today? First, we are going to learn all the myths, mistakes, misconceptions, and belief that a lot of people have around taxes. The second thing that we are going to do is we are going to talk about what mistakes we should avoid when we owe money to the IRS. And then the third thing that we are going to touch on is how we can minimize our tax liability now and also in the future. And for those that don't know about me, my name is Sarah Xavier. As I mentioned, I am a financial professional and a financial coach, and I teach women to take charge of their finances. I help them to feel empowered, listen to their intuition regarding money matters, so they can live their lives in their own terms. And there are about 5 different things that affects our income. And the one that I will be talking today about is taxes. Taxes actually eat a big portion of our income. And again, it is not about not wanting to pay them, is that we only want to pay our fair share. We don't want to pay any more than that. So before I get started talking about the myth, the misconceptions, etc., I want to show you a couple of statistics about tax season. And this is as of May 2022. This information is coming directly from the IRS. And as of May 2022, there has been 145 million returns that has been received by the IRS, compared to 148 million that were received in 2021. So I don't know what happened with the other 3 million. Maybe they don't have a job. Maybe they forgot to file taxes, right? But these are the numbers right now, up to May 2022. The second thing is about 96 million has already received the refund. That means that a total of $292 billion has been sent to the taxpayers back as of May 2022. And then the third thing is the IRS has over 21 million unprocessed returns, and 40 million has math errors. So aside from the returns that they have in process, there are also another 40 million that has math errors, that has issues with the taxes. So it could be you, it could be me, it could be somebody else. At the moment, I think I pay everything, and they process my tax returns, so I pay money, and I will explain a little bit more about that in a moment on why I pay. So again, we are going to be discussing today the mistakes, the myth, and misconceptions that we can have about taxes. So let's get started. And the first one is this one. The first one is not wanting to make more money because we don't want to pay more taxes. And this, unfortunately, is a lack mentality or a scarcity mentality. And again, this is about not understanding how taxes work. Because remember, the more money you make, the more people you can help, the more lives you can change, the better your life can be. So thinking that you want to limit yourself on the amount of money because you don't want to give money to the IRS or to the state is a big mistake. We don't have the right mindset when it comes to that. Remember, when we have an abundant mindset, we are not going to feel that we have that lack, that we have to pay on these taxes. And remember that when we pay taxes, we are actually like helping ourselves too. And I will clarify more on that in a moment. The next mistake is about not planning for taxes. If you are an entrepreneur and you are not separating money to pay your taxes either quarterly or yearly, this is a mistake. Because then at the end of the year, or when you have to pay the taxes for that year, you're going to be scrambling, right? And not only that, but if you don't have the money, then that's going to turn into a bigger issue. So make sure that one of my suggestions that I give my clients is that you have a complete separate account just for your taxes. And you want to itemize every single month. How much do you think you're going to have to pay in taxes every single month? So you can separate certain amount. Maybe you can separate 20% or 25% of your income of what you have made in order to pay your taxes. That way, when it is the time to pay them, you don't have to be stressed out, or you don't have to deal directly with the IRS trying to set up an installment agreement or trying to negotiate and lose something in order to pay those taxes. Because remember, guys, the IRS is a tax collector. That's what they do. And they are not a financial company. They are not in the business on lending people money. That is their money, right? And they want it at the moment that they have stipulated, with which in 2022 it was April 18th. And I will talk a little bit more about that in a moment. The next one is thinking that tax deferred accounts are tax-free accounts. Guys, 401k, IRA, 403b, 457, all of that are tax code. All of that are codes that are telling the IRS that they have money in those accounts. So, for example, a lot of people unfortunately think that a 401k, when they deferring taxes, that is actually tax-free. So when they come to the age that they can retire that money, they think that, okay, I just pay 10% on taxes, or I just don't pay. I don't even have to declare it in my taxes. And unfortunately, that creates a lot of issues. So make sure that if you are taking money out of any of these accounts, you have to pay taxes, because all of that is viewed as income. The next one is getting excited when you get a tax refund. And Yes, it is nice to get a bigger paycheck or get some money back after you file taxes. If that happens to you, congratulations. However, when you are entitled to a refund, what that means is that you are lending money to the IRS. And that is money that you could have used to grow your money. You could have used that money to work for you. But because you were lending it to the IRS was using it to grow their money, right? Not your money. So make sure that, especially that, again, you want to pay your fair share, and you want to itemize your taxes, and you want to make sure that that money, instead of like going to the IRS and just wait a whole year for you to get it back, that you use that money intelligently and intentionally, and you put it in places that you are going to make money even while you sleep. Okay, so don't get that excited when you get a tax refund. It is nice, but it is not that nice if you really think about it and change your perspective about it. The next one is getting upset when the rich, and I put it, in columns, when the rich pay less taxes. Well, let's talk about the tax code book. The tax code book is a huge book like this with very tiny letters. And at least between the first 50 to 100 pages, it is all about your responsibility of paying taxes. The rest of the book is all about how you can minimize your tax liability. Therefore, when you learn about how to minimize your tax liability, you will pay less taxes. So the rich, which normally for the most part are corporation, owners, business owners, people that are entrepreneurs, they actually understand how taxes work, and they take the advantage that the law has given them in order to minimize their tax liability. So instead of having, again, that anger and that negative emotion towards the rich or the people that have been able to minimize our tax liability, the best thing that we can do is look for ways in order to minimize our tax liability. And there are many ways. You can do it through buying property, real estate. You can do it in putting in the right investments, starting a business, buying a business. There are many ways that you can minimize the tax liability too. And don't forget that a lot of these rich people, they are self-made. They were not rich before. They were not born in a silver platter. Okay, they actually work hard to be where they are. So instead of feeling threatened or upset about it, you should feel inspired to do the things that they were doing, or that they have done in order to achieve their goals. So you can achieve your goals too. All right. The next one is not filing your taxes on time or prior to the deadline. We sometimes are massive procrastinators, right? And there's a reason why the IRS has a deadline. Again, this year, normally it's April 15. This year it fell like on a weekend or something. The IRS decided to extend it to April 18th. So if you fail to file your taxes on time, you could be subject to penalties and interest. So why would you allow yourself to not file your taxes on time? Like, so we have like 4 months. We have January, February, March, April, or half of April at least, to file those taxes. So make sure to file them on time. Now, if you are not able to file them on time by the deadline, the IRS has given you the opportunity to file an extension. Now, I will talk a little bit about that right now. So if you are going to owe money to the IRS, you file an extension, you are obligated to pay whatever you owe prior to the deadline. And I'm not talking about the October 15 deadline, I'm talking about the April 15 deadline. So, like, if you know that you are going to owe money, you want to pay that money prior to the first deadline. Yes, you can file your taxes later. You can, file your taxes, close to October or prior to October 15. But if you know that you are going to owe, you need to pay that before April 15. Okay, if not, you will be subject again to penalties and interest. The next one is when people decide not to file their taxes or not to pay their taxes because you disagree on how the government is spending the money. Well, I understand. You might not like where all the money is going, wherever it is going, right? But at the same time, remember that a lot of that money is going to schools, is going to fix the roads, bridges, it is going to parks, it is going to many different things that are for your own personal enjoyment as well. But in the end, you're not hurting the IRS for not filing your taxes or for not paying your taxes. You are not hurting the government for not doing that. You're actually hurting yourself. Why? Because in the end, one way or another, they are going to come after you to get that money that they think is their money, right? Or which is their money anyway. So why would you hurt yourself? Why would you shoot yourself in the foot, right? That doesn't make any sense. And unfortunately, I have talked to people that think this way. All right. Now, if you are an entrepreneur, you want to make sure that you have the correct business structure. And I already talked a little bit about this because having the correct business structure is going to minimize your tax liability, and that can save you thousands of dollars. So make sure that if you have a business and you're already profiting from that business, make sure that you have the correct business structure when it comes to that. The next misconception or mistake is thinking that it is your CPA's responsibility to make sure that there are no errors in your taxes. And that is a huge misconception. And this is a lesson that I learned it the hard way because I got audited over 10 years ago. But like the auditor told me, whose signature is in this tax return? And when I look, it was my signature, not the CPA's. It was my signature. Therefore, it was my responsibility to ensure that that return was accurate. And I understand that it's kind of like ironic that you're like, well, I don't know the full tax code, right? How do they expect? I didn't get an accounting degree to know those things. Yep, that's true. But no matter what, it is your responsibility. So when you meet with your tax preparer or your CPA or accountant, you want to make sure that you guys review everything together and that you understand what those numbers are, because you want to make sure that you don't get into trouble later on with the IRS and then you get audited, or they said that you failed to report all of your income, or that they say that you underpay, or that you didn't declare something. Again, you want to make sure that everything is accurate. And the next one is thinking that because you are older or that you are retired, you shouldn't have to pay taxes. And this is a huge mistake that unfortunately a lot of elderly people make. And the reason for that is because they have planned for just enough. They have planned just to live out of their Social Security. And Social Security is about supplementing your income, is not to have all of your income. So if you are receiving Social Security or you are receiving some type of retirement, don't think that you are done and that you no longer have to file your taxes. Is there something that is certain is death and taxes, and the IRS will tax you even after you die. So make sure that you understand that it is still responsibility all the way, no matter if you're 70, 75, 80, 82, 90, you still have a responsibility to file your taxes. Yes, there are certain guidelines that, like if you are under certain income threshold, you don't have to file taxes, but you want to make sure that that is the case. And sometimes you even want to file something that is called non-filer, just to let the IRS know that you didn't make enough money to file taxes, okay? The other one is putting all your money on taxable investments and tax-deferred investments. And I already mentioned that 401k, stocks, bonds, all of that are taxable investments. IRAs and 401ks, 403b, 457, all of that are tax-deferred investments. So a lot of times we think, like, for example, if you make $100,000 and you have put $6,000 in a tax-deferred investment, that might be, you only gonna be taxed on $94,000, right? So that will save you for that year about $1,500. But unfortunately, what you're not thinking is that the money that you're saving, that $6,000 that you're putting away in a tax-deferred account, is going to start growing. So you still owe that $1,500 that was deferred, but then you also have to pay on the growth of that money. You have to pay taxes on the growth of that money. So you don't want to put all your eggs in the same basket, in the same type of investment. So you want to make sure that you put your money also in tax exempt investment. That yes, you might have to pay taxes now, but then later on, you don't have to worry about paying taxes on the growth of your money. And there's obviously a lot more, and I will give you a cheat sheet on this, but I want to add this bonus misconception because in 2020, right, we have the pandemic, and a lot of businesses got grants, right? They got grants from the government under the CARES Act. And there is this misconception right now that the CARES Act, if the government gave you a grant of $100,000, $200,000, $300,000, $500,000, that you are excluded of paying taxes on that grant. And unfortunately, that is not the case. These grants are they are not excluded from the business gross income under the code, and therefore they are taxable. So unless you are part of a recognized Indian tribe, you might not have to pay taxes on those grants. But if you're not, you might have to pay taxes. So if you got a grant from the government during the pandemic for your business, I hope that you have separated income to pay the IRS and the government for the grant. Now, if it was a loan, because like they gave the loan, the PPP loans, and they also gave the grant. So if it was the loan is a loan. So you don't you have to pay it back, right? And at that point, you don't have to pay taxes on that because it's in the shape of a loan. All right. So that was a bonus that I want to talk to you about. Now, if you owe taxes, what can you do? Well, there are a lot of things that you can do. I want to show you this quote from Albert Einstein. The hardest thing in the world is to understand is the income taxes. And I know that we've been talking about that. It's very complicated. But if you owe money, what should you do? Well, I'm going to start with number 4 because that's probably the one that I should have put first. But if you have the money and you know that you owe that money, just pay it off. Why delay? Why accumulate interest? Why set up a payment plan if you had the money to pay it off that will subject to, first of all, when the IRS set up a payment and installment agreement on your behalf, they charge you money. Then you get penalties. It's not that now you get a payment plan and you don't get penalties. You do get penalties. You get interest, right? That accumulates. So the money that, yes, you had the payment plan, but your debt grows too. You will have to. It's like it's like getting a loan as well, and that loan has a very high interest. And I tell you this, penalties and interest from the IRS are quite daunting. So if you have the money, if you have done your homework and separate the money throughout the year in order to pay your taxes, just pay it off. The second thing that you should do is probably you might want to go back to your personal CPA and see if there are any errors in your tax returns, or for them to help you establish an installment agreement with the IRS if you are not able to pay it in full. The next one would be to talk to a financial professional or a coach like me, where we can actually guide you and put you in front of the right people that are going to be able to help you to resolve your tax issue. And then the last one, which is probably where I would take you, right, will be a tax resolution company. Like if you come to me and you tell me I have a tax issue, I owe money to the IRS or I owe money to the state, I don't know what to do, then I will guide you and I would lead you to a tax resolution company. Why not your CPA? Because your CPA, their focus is on doing your taxes. Their focus is not resolving tax issues. So yes, you might be able to work with your CPA, but sometimes they don't even know what to do. They don't even know who to talk to inside the IRS. They don't know how to negotiate. All they're going to do is that whatever the IRS tells you, that's what they're going to do. You know what I mean? So when you hire a tax resolution company, they are going to negotiate on your behalf. They are going to not just make one phone call and accept whatever the IRS says. They are going to go a little bit of back and forth until they get something that will benefit you. They also know the options that you have, right? They can find out if there are any issues with your taxes. They can get you back on track with your taxes if you haven't filed your taxes in more than 5 years. So again, all of that a tax resolution company will do for you. So again, if you owe taxes, make sure to reach out and I will take you to the right company that I trust, that I know is going to be able to help you to resolve your tax issue. So there are so many other things that we can talk when it comes to taxes. And as I mentioned, I already talked about this, that the best option is the tax resolution company. That's all they do. They resolve tax issues for their clients. And you don't want to talk directly to the IRS when you know that you are not going to be able to pay that money, right? You want to actually have somebody else talking for you. It is kind of like going to court. Yes, you can represent yourself in court, right, in front of a judge. But most people, they prefer to hire an attorney because they know that their outcome, the possibilities of having a better outcome are much higher than if they represent themselves in court. So make sure to get an expert consultation. I can guide you through that. The next thing that you want to do is you want to do a financial analysis. And this is what you will do with me. You and I will sit down and we do a comprehensive overview of your finances. And also, what are your needs? What are your wants? And what are your goals? And we will create a plan of action to apply throughout the rest of the year. Not only that, but we will find the gap between your income, your expenses. Like where is the gap? How we can close that gap so you can keep growing your income, so you can minimize your tax liabilities, so you can so your money doesn't go to debt, right? That all your money goes to debt. Again, this is what you and we will do. So make sure that if you want to do that financial analysis, and then you want to talk about how you and I can work together, because again, in this video, we definitely cannot do everything, right? It's impossible for me to teach you everything that has to do with your finances and how you can get back on track of your finances, etc. And it's not just about just creating a budget. There's so much more. So if you want that financial analysis, make sure to reach out to support at Finance Babe, and then we can set up a time. Now, I do have a bonus gift for you, okay? Everything that I have taught you, I hope that I have brought a ton of value, and that it has helped you to change your perspective when it comes to filing taxes. But again, when it comes to mindset, and when it comes to the difference between lack, scarcity, and abundance, again, this is something that is a work in progress. We have to work on that every single day, but we need additional tools. We need additional help. We need even accountability, right, from a financial coach. And I'm sure that you probably want more information about the mistakes and misconceptions and the myth that I have spoken here. But I also have an extra gift, a bonus gift for you. And it's like 50 mistakes that people make when they owe money to the IRS and they decide to call the IRS themselves. So if you are interested in getting this, and again, I have not done the cheat sheet yet, to be 100% clear, but I will complete it and I will send it to you. So again, you can go to support at financebabe.com, and you can request your bonus gift, the cheat sheet, the 50 mistakes. So all you have to do is says, please send me the 50 mistakes. Okay, just send me an email. And I really appreciate that you have watched this video. If you are in this slide, it's because you have watched the full video. So thank you so much. And again, I'm here to support you. And don't forget that taxes is just one of the 5 things that eat your finances, that eat your money. So if you want to learn what are the other 4, make sure to reach out also at support at Finance Babe, and then let's have a chat, okay? So again, my name is Sarah Xavier, creator and founder of Finance Babe. Looking forward to talk to you, and you have a great day. Ciao.